tilting into those areas. Europe, up until basically 12 hours ago, has been outperforming the U.S. from an equity standpoint this year. And so, this is a much bigger picture than just one action. To size this, the GDP of the Ukraine is $164 billion. I mean, that's a fraction of global equity market cap. That's a fraction of European market cap or U.S. market cap. Russian trade is $500 to $600 billion. Half of that goes within the CIS. And that's, again, 1 to 2% of global trade. So what we do think is that we likely have seen not just peak hawkishness on central banks, but this reinforces the notion that we've seen kind of peak globalization. All of these things lead to a challenge both on the growth side, although we don't think this meaningfully increases recession risk given kind of the relative size of what's at play here from a kind of global GDP standpoint. But it also does fuel potential for higher inflation given that challenge around likely less globalization, less trade from here.
The next CPI read, March 10th. Then the big meeting, March 16th, that's where the decision comes from the Federal Reserve. Tom, seeing some really big moves on euro currency pair. Euro-Swiss, negative almost 1% now, largest drop since 2019.
These are huge moves, and what's important, folks, is they don't all move at once. Across equities, bonds, currencies, commodities, it's here, it's there. I've got a down negative 800, a VIX out almost 6 big figures. But right now, John, it is a statement about Europe is the United States open, and that statement is fear, and that means strong Swiss franc.
Crude up to 104.40 on Brent, up 7.8%. WTI just short of 100, breached that level a few hours ago at 99, let's call it 20, up 7.7%. Elise, I want to go to the investment bank side of JP Morgan, forgive me. This was their quote. Just assuming Russian escalation, we've got that, is coupled with an Iranian deal, we might get that. The team goes on to say we see the Brent oil price averaging 110 in 2Q22, 100 in 3Q, 90 in 4Q. You know the energy equities move here, Elise. Year to date, it's just been absolutely massive. Any reason to stick with it?
We think so. We have been talking about putting on energy exposure both through the commodity and the equities that are linked to the sector so far this year, and we continue to view that as a good place to hedge against some of these ongoing tensions and escalation. So absolutely an area that we're continuing to consider and talking to clients about putting on exposure in.
Futures down 2.5%, at least from the NASDAQ. Bear market around the opening bell. That's what we're poised for.
It's right now a really dramatic scene in markets, and people are looking at the idea of higher oil prices and, frankly, the potential for a stagflationary bend impeding the economic growth. One thing that we don't hear, though, in commentary, I got to say, John, that I find interesting, if the Fed becomes more dovish, if the ECB becomes more dovish, no one is saying that is a reason to then buy. We're not seeing this as a reason to become more bullish, just recognizing some of the potential threats to economic growth.
Because they're dovish for the wrong reasons. The move you're seeing in real yields today is not supportive of the market. Real yields lower, break-evens higher. Where a central bank has to be dovish for the wrong reasons, that's not an environment, Lisa, you want to get long in.
Which is the reason why there's such a lack of conviction right now, and there's a lot of moves all over the place. But again, to talk about the yield curve flattening, which typically is a predecessor to a recession, being driven by the long end, by being driven by a bite being taken out of longer-term growth, says volumes about where we are right now in this moment.
And that's why inflation has changed the game. When we say dovish, we mean a pause. We don't mean easing. They can't ease this time around because they're already at zero and inflation's north of 7, Lisa, on CPI.
This has been one of the big risks, is that because the Fed is already so low, because the ECB is already so low, what further can they do if there is an economic disruption from an exogenous shock just like this?
And that's the additional risk here as we see the opening bell in New York City. Futures are lower 2.6%. In the bond market, yields are lower by 10, 11 basis points to 188.71 on a 10-year. In FX, euro dollar 111.51. Wow. Just these big moves, Tom, we're seeing in foreign exchange. I mentioned those euro currency pairs. Euro dollar negative 1.4%.
On this historic day on Bloomberg Radio, John, you see this every day on Bloomberg television, but the loneliness of those exchanges on opening, the lack of celebration,
yeah, Tom,
really speaks of this moment.
The clapping
There's no
is
clapping.
very absent. It's almost embarrassing, I think, to clap around the open in Bow this morning with equities down and down hard. At the moment, as we open up, Tom, about 50 seconds in, here's the state of play on the S&P down by 2.5%, on the NASDAQ down by 3.27. TK, you can run through the year-to-date figures. I can tell you where we were year-to-date coming into today. The S&P was already down 11%. The NASDAQ was already down 17. That's intraday. Coming into today, Tom, they were the numbers, down 11, down 17. Add it all up, it's brutal.
Again, I go to the Haven indicators. In gold, 1954 the ounce, 2.4%, certainly distance away. John, I really want to say we're seeing extraordinary news flow across what Bloomberg does best, which is the aggregation of global headlines. We're being scrupulous about who we attribute to, John, but there are distressing hints, if I can, out of the 3 or 4 fronts of Ukraine under battle.
The NASDAQ entering a bear market. Let's get to Kaylee Lines for some movers. Hey, Kaylee.
Hey, John. Well, broadly, it is a down day for this equity market. There are a few pockets, though, of strength, and that is tied to really moves in underlying commodities, and that's translating into some energy and material stocks. Oil movers, for example, moving higher with the moves we are seeing in crude. The likes of Chevron up about 0.5%, though that is off pre-market highs, and you're even seeing the likes of Devon Energy now getting caught up in the selling pressure. You're seeing also, as well, gains for some mining-related stocks like Newmont Energy, and then defense also catching a bid here. Lockheed Martin is up 2.25%. But there are a lot more baskets of stocks that are feeling that downward pressure on the back of these geopolitical tensions, guys. Tech, of course, bearing the brunt of this sell-off. Apple is lower by around 4%. Nvidia is as well. And then you also are seeing pressure across the travel complex, across the banks complex as well, as we're seeing yields coming in. JP Morgan shares taking it on the chin, down about 4%. Carnival is down 6.4%. But really what is leading the losses is tech. You mentioned it, John. The NASDAQ 100 entering a bear market, now down more than 20% from its peak last year. Tech, of course, already weighed on by what has been perceived to be a higher rates, higher yield story, calling into question some of those richer valuations. Now you layer on top of that the broader de-risking we are seeing on the back of geopolitics today, and it paints a very, very ugly picture, John.
Kelly, thank you. Intraday, we're down more than 2% on the S&P. On the NASDAQ, down by 2.5%. Equities lower, Tom. Year to date, bear market for the NASDAQ now from the previous high at the latter end of last year. Year to date, down by, 18 percentage points? What a gap lower we've had, Tom, but the story's evolved. The reason for the move lower at the start of the year, the move lower this morning is different, Tom. The character of the sell-off has shifted too.
Yes, the character to me, John, is the absolute critical thing, and that, yes, we're down, and we can talk bear market and measurement. I want to remind people a bit younger that a bear market after the 18% is usually perceived as 30 to 35% down. I'm not inflammatory. I'm just saying that's what happens when you really go. What's missing this morning, John, in this historic moment is this idea of catharsis. I don't see any catharsis on the Bloomberg screen.
Elisa, when we talk about the character of the sell-off at the start of the year, real yields higher, nominal yields higher. We did some massive work at the front end of the yield curve. This morning, flip it the other way. Real yields lower, break-evens out, and the Fed stuck between a rock and a hard place. What can they do about the environment we're in at the moment?
Which is the reason why tech sell-off is really strange, right? Because you would expect tech to actually do better, outperform as a safe haven. And this raises a question of whether we're seeing a sell what you can kind of environment, not necessarily what you want to. The sort of flooding into any sort of haven or just hoarding cash. You could see that in T-bills turning negative, the most negative going back to the beginning of the pandemic.
Just looking at the sector breakdown, financials, bottom of the pile around the open. We're down about 3 percentage points there on the S&P. The only standout in green, the only industry group advancing, I mean, you can guess it, energy, up by 0.4%. Mike Wilson, I want to come back to you and just work through some of this with you. Mike, you came into the year pretty bearish, to be fair, at 4,400. You're at the low end of all the forecasts on Wall Street. Mike, let's talk about this. What would make you bullish? What would you need to see here?
Well, it's price. We're getting there, right? So, I mean, the reason we weren't bullish is there was no upside, and there was downside to targets. So, we're pretty disciplined, as you know, John. We don't get too emotional around things. And so if we got to 3,800, we always thought we'd overshoot to the downside of, 4,000 was the minimum downside. We'd start to get interested. 3,800, okay, fine. But I think we could overshoot that if, in fact, this, accelerates the ICE scenario into something that feels more recessionary for a couple of quarters, at least from an earnings standpoint. We'll see how that plays out. So it's price, number one. But what I really want to see is I just want to see expectations get more realistic on margins and some of the growth from consumption that we think is now already starting to play out. We're hearing it from some companies, and that was long before this, event that's happening today occurred. Okay, that was already in process. So let's just get those expectations down, or let's get price down, or let's get both down, and then we'll probably step in.
Well, price is down now, 41.27. Mike, when you do the homework and you come up with 3,800, can you just run us through it briefly? Where does that number come from? What's special about the 3,800 mark?
So there's a lot of technical support there, number one, which is what you got to do in these types of situations when you're in sort of a, we're in a bear market, as Tom said. We've been in a bear market, though, for 6 months. It's just people now are waking up to it. I mean, the average stock was getting crushed last year, as you know. So here we are. We're having the finishing move. So we're just watching the technicals. 3,800 looks pretty good in that regard. Secondarily, from a valuation perspective, we've always said 18 times is the right number. 18 times 225, which is, year end, that's 40.50. And a little overshoot, call it 17 times wouldn't be out of the question. If numbers come down sort of to 215 on this growth scare, that gets you to 3,800. So there's fundamental support, there's technical support. That's where the number comes from.
In the meantime, people are trying to parse through what type of supply chain disruptions there could possibly be. I was talking about what's the rationale behind selling tech, and Elise, Gina Martin-Adams of Bloomberg Intelligence came out and said, actually, this is the surprise victim of a Ukrainian invasion by Russia, the idea that Russia is cutting off some of the supplies from key areas that feature in some of the supply chains. How much are you looking at this type of granularity when deciding how to move next?
We're looking into the granularity, but I think it's kind of an oversight of what's going on behind the surface of everything with Russia and Ukraine. To us, the year-to-date sell-off in tech has largely been driven by the Fed's, aggressive shift towards policy tightening. Obviously, that picture has become a little bit more muddled for all of the reasons that we've been discussing for the past few minutes, but if and when we would see any sort of rebound rally in tech, we would be keen on rotating some of those exposures into more defensive segments of the market. And that has more to do on our outlook that this economic cycle is progressing. And although we think the expansion will continue, we do want to start repositioning portfolios to kind of get away from that rising tide lifts all boats, speculative sort of benefits environment, and more towards, well-insulated portfolios that can navigate a maturing cycle.
Just getting a headline, Tom. 3 p.m., the ECB's President Lagarde, EU officials to hold a press conference at 3 p.m.
3 p.m.
Put that one in the diary. President Lagarde of the ECB and EU officials to hold a press conference.
John, is that 3 p.m. our time?
Trying to work that out, Tom.
Yeah,
if that's 3 p.m. local or not. I'll get the team to work that out quickly, but certainly in the next few hours we're going to hear from the ECB president.
Oh, there it is in comments on the central bank, and of course they're observing markets moving here as well. John, with these esteemed guests, I want to go to a brilliant essay, no surprise, from Michael Purvis of Tallbacken, where he channels the game theory that Dr. El-Erian is so famous for, the moments of T decisions that can be made, and going back to Frank Knight in the strange word uncertainty on unknown unknowns. And that's really what we're talking about here into this afternoon of politics and the markets and trying to reset to our good guest world is what are those unknown unknowns right now.
And the psychology of the moment too. And Eric, I'd love your thoughts on that. This is a really difficult moment, trying to work out how this settles. Hopefully settles down soon too. And what it means for a market, what it means for policy. Eric, everyone wants to buy the dip, and then we get one. They want to buy the correction, and then we get one. And you start to conflate it with even scarier things on the horizon. Maybe this is the one. This is the one where we get this monster correction in tech stocks and we don't recover for 10 years. Eric, how do you divide the emotion of the moment with just the fundamentals, to focus on where we are and what the price of those fundamentals are?
I think that it's important at this point to step back and ask the basic question: does this shock to the system meaningfully increase the risk of recession in the next 12 to 18 months? If the answer is yes, then there's look out below, right? Then that would generally lead to a true full-on bear market. If the answer is no, this is merely creating a more challenging growth inflation mix, then you can start doing the kind of math that Mike just took us through and find entry points for owning equities, assuming reasonable earnings growth, assuming reasonable valuations, and in fact, certain aspects of the market environment have just gotten more attractive for equities. Real yields have gone from negative 40 to 45 to 55 basis points to negative 85 basis points. That's generally correlated with more higher valuations in equities. when you talk about uncertainty, one thing that we would be doing or looking at right now or speaking with our institutional clients and clients more broadly about is taking advantage of this environment by owning volatility. If you want to own some more equity at this point, do it by selling puts on an equity index with VIX at 37 rather than VIX at 20 or VIX at 15. Manages your downside risk. You're capturing very attractive premium and gaining some additional equity exposure on the margin.
Elise, can I give you the final word on what you're looking for through the rest of today?
Sure. We're obviously expecting more volatility from here, but very much encouraging investors to stay the course, stay invested, focus on the longer term fundamentals, and, kind of acknowledge that geopolitical events like these don't actually tend to have lasting impacts on equity markets, particularly in the United States.
Elise Ossenbach alongside Eric Knudsen and to Mike Wilson. To the three of you, thank you so much as we work through a difficult time worldwide, and particularly, of course, especially for the people of Ukraine. Equities down by more than 2% on the S&P. On the Nasdaq, Tom, down by more than 2%. This has been a tough time. That's the story for equities. Let's look at the story for commodities as well. To work through Brent and for WTI, Tom, Brent crude 103. I mean, we back away from session highs, don't we, Tom? But these numbers are pretty stunning.
Yeah, they're stunning, and I really want to emphasize it's not just about oil. I'm bringing up the wheat chart, which is 1, 2, 3 days of spike up. I don't have the percentage move right now, John, but you look at it, wheat is quoted in Germany, wheat quoted in the EU, and with the huge Russian wheat exports, you wonder how that fits in. We heard earlier, would they sanction wheat? Would they sanction agriculture? Maybe not. But nevertheless, commodities is not just Brent crude this morning.
I talked about Javier Blas this morning, Tom, and the opinion piece he wrote earlier this week. I want to get to Javier right now. Javier, just to go through the numbers, on any given day, on a single day this week, this is what the UK, EU and US spent on commodities from Russia. You said close to 700 million. Javier, any reason to believe that changes today, tomorrow, the day after, next week?
Well, that number is already up because commodity prices are massively up. I mean, I'm looking at my Bloomberg screen right now. Natural gas prices in Europe are 47% up. That's 47% up on the day. Oil prices up 6%, aluminium 5%. Wheat prices that Tom was mentioning earlier in Europe up 15% to an all-time high here in Europe. So the volumes of natural resources that we are buying from Russia are getting more pricey, and for that reason we are sending more money.
Yeah, Javier, to your acclaimed book, not only talking about oil, but the people of oil. The people that are in that book, they're heavy hitters. What will they say to the politicians attempting to apply or gauge the need for sanctions?
I think that probably, and I have been speaking to some of them this morning, they're going to be warning that whatever you do, you think about the unintended consequences. You need these commodities for the economic health of Europe. So you go very hard on Russia, you may have a recession in Europe. So there are going to be a bit of dose of warning. The other thing that they are telling me is that whatever happens with the sanctions that is announced by Europe and President Biden later today, there is a lot of self-sanctioning already happening from the financial institutions. Many American banks simply do not want to touch anything that has to do with Russia today, and they are warning also about that.
Javier, you mentioned earlier offline that this is the first time that you have ever seen all commodity complexes surge in tandem. Can you give us a sense of the significance of that?
Well, it's very important, particularly for the commodity traders and the banking industry. And one thing that we really need to start watching right now as we are entering the afternoon in Europe is margin calls this afternoon, this evening here for the commodity markets. We have huge price increases across the whole commodities complex. It's not just gas or oil or aluminium or wheat. It's everything at the same time, and something that we have not seen before, moving simultaneously at this rate. The size of the margin calls tonight are going to put a lot of stress on some of the big trading houses. I think, and I have spoken to some of them, they were prepared for this, they were stress testing, but some medium and smaller players may have trouble with the size of the margin calls that is coming.
Javier, wonderful as always, buddy. Good to catch up. Javier Blas there out of London. We'll be catching up with JP Morgan's Christian Malik a little bit later this morning. We'll do that in the next hour. That man has a big call in the crude market. I wonder if it just got even bigger. I want to turn to Maria Tadeo out of Brussels. Maria, just to touch base with you. Just got a headline moments ago that we'll hear from Lagarde and EU officials in a news conference. Any idea when we're going to hear from them?
Look, I think it depends on how long this meeting goes, but if you look at the reason why she's doing this today, let me just give you one stat. If we do get big sanctions on Russia, for every dollar the United States is going to lose on this, the Europeans stand to lose 10. So this gives you an idea of the impact that this could have on the European economy. As you know, there was a meeting coming up in March. The market was assuming this was the end of EC money, QE pandemic program. A lot of people would now tell you, well, maybe it's time for the ECB to look at this differently. And there will be a real question about the implications that this will have for inflation. Remember, if Russians do go through and follow through this idea of, well, if you don't back Putin, we're going to make you pay very expensive for energy, then that is going to feed directly into the inflation picture in Europe. So a lot of this has to do with coordination between the central bank and the politics. We also know that behind the scenes, European officials on the political front are meeting too as we speak, and they're keeping a very close eye on the situation, particularly around the Ukrainian capital, around Kyiv. They're very worried about whether or not Russian troops could potentially take over the city in the next few hours. We're talking about hours now.
Yeah, Maria, thank you. And actually just getting some clarification, a correction. We're all following the headlines here. The ECB's Lagarde and EU officials will hold a press conference tomorrow. Not later, Lisa, tomorrow.
And this does matter because there is an issue of whether central bankers are going to be formulating some sort of emergency response or whether they're just going to keep an eye on this, and it indicates more of the latter than the former. I just want to go back, though, to something that Javier Blas said, and just sort of to reset this idea of margin calls, this idea of fallout that could go far beyond what we're seeing right now in such violent moves, particularly as supply chains get disrupted and the expectations for more as Russia does increase its escalation in its invasion with Ukraine.
Things are moving fast, Tom. Just trying to keep up. We all are.
We are, with the Dow negative 814. For John Farrow, I quote SPX here, negative 88 on that, 2.1% down on Standard & Poor's 500. The VIX out 6 big figures, now out only 4 big figures, but a true churn to the market, and critically, Euro Swissy breaching 102 moments ago. Strong Swiss franc. It is time to recalibrate across politics and economics. We can do that looking at the markets as well with Michael Darda of MKM Partners. Michael, you and I have gone back over the years as students of history. This is a regime change as we all breathlessly see the speed of movement of Russian, or indeed I could almost say Soviet forces. Fine. Of this regime change, how permanent is it?
Well, Tom, we've got a lot of uncertainty in that regard at the moment. Obviously, markets do not like disruptions to commerce, and sanctions and wars are presenting exactly that. So, we've had a sell-off here that intensified. But quite frankly, if I could send a message to the retail investors that are out there listening that might be on the verge of panicking, you really do not want to be selling into weakness. I think it's very easy to open up the portfolio and see what's happened to the markets year to date, and it's intensifying, and all the headlines are negative. But I would just simply recommend to the retail investor to try to buck the trend here a bit. And if you haven't sold into this, this is not the day or the moment to be selling. In fact, just the reverse if someone has a long enough horizon and the appropriate risk tolerance.
Michael, you and I have always talked of the acclaimed work of Roger Ibbotson and that famous S&P chart he made that goes way back past the Depression as well. In World War II, Guadalcanal was for me the low in 1942, what I call the Guadalcanal low. Except nobody knew about Guadalcanal because of the secrecy of the Pacific battles. Now we are dealing in real-time social media, Twitter showing us helicopters moving south to Kyiv. How do investors deal with the immediacy of the information of this modern day?
Well, the way they deal with it is by not overreacting to what already happened, okay? We've already had a correction. It may continue. What the fact is, we came into the year with the markets at least modestly overvalued. Our work was saying around 10% for the S&P 500. That's been completely wiped away. And so there's a lot of uncertainty. You're not going to be able to perfectly time the market, but the reality is The Fed has been behind the curve, is still behind the curve, and we can debate about what happens in March, but we're probably not going to see the U.S. economy careen into a recession this year. It'll probably still be well above trend growth. The Fed will be moving modestly, but will be moving this year. And so slow and steady wins the race here, Tom. If the individual investor has the intestinal fortitude to be buying into weakness, not at the beginning of the year, but now we're down more than 10%, this would be the time. And to be patient. A lot of uncertainty, but what's happening in Ukraine is likely not going to be pushing the U.S. economy or the global economy into recession.
Michael, you're talking about how much strength there is in the U.S. economy, how you expect the Fed to stay the course. If they don't, if they buy into the same narrative that markets are right now of perhaps moving away from some of the rate hikes this year, do you think that would be a policy error?
Big time. Big time. So, let's just break down what happened in credit markets this morning. If we look at the 5-year horizon on the yield curve, real rates dropped by about 25 basis points, but inflation expectations rose by exactly the same proportion. All right. So what does that actually mean for the neutral interest rate? It essentially means it's a wash, right? And the starting point coming into the year was the Fed way behind where it was even in the last cycle without a big inflation overshoot. So the Fed's policy rate with 5-year expected inflation above 300 basis points is 250 basis points below where it was in late 2017 when the labor market had recovered to current levels of utilization. So I think there's a risk here if the Fed's going to slow it down. I don't think they'll skip the March hike unless something really crazy happens in the intervening weeks. But the risk would be that we're kind of baking in a behind the curve inflationary Fed stance into the cake.
Mike, thanks for being with us, sir. Mike Dowler, just wonderful, as always, buddy. If you're just tuning in, equities are lower by 1.7% on the S&P, on the Nasdaq by 1.3% off session lows. Overnight, as you know, Russia invading Ukraine. And as the morning progressed, we started to get a deeper suggestion, a bigger suggestion that they were heading towards the capital. All headlines point to that direction at the moment, Tom. Starting to get an understanding of what's happening right now between G7 leaders, including the United States. There was a meeting on Ukraine which started at 9:17 DC time. Biden, G7 leaders discussing the response to Russia on Ukraine. Seemingly here, Tom, they all want to stay on the same page, keep the same script, and come up with the same reaction, the same response. The effort here, of course, is incredibly difficult. The objective, of course, is to cripple Russia. They've been very clear about that, Tom. Can they do that without crippling Europe? That's the challenge for leaders with those talks ongoing.
And I would emphasize the silence here. Sometimes, folks, it's not the news you see in the headlines coming out of the White House. Anne Marie Horton is 1600 Pennsylvania Avenue. To me, John, what is so important here is the headlines we're not seeing. We're really not seeing news flow from the 3 or 4 ports of the Black Sea where the Russians are attacking. Reports of Mariupol, clear reports of Odessa. There's no question about that. It's the headlines, John, that we're not seeing into the Ukrainian early evening that are so important.
And the headlines we're waiting for, Lisa, the response of European and U.S. leadership.
They're crafting the response. That's what we're hearing from the G7 meetings. How much has already been pre-crafted, right? I mean, they've been talking, they've been meeting for the weeks leading up to this. How much they have to reshift because of the speed. And we've been talking about this all morning, John, the speed of the invasion in Ukraine.
Well, the speed of the energy move, too. I mean, Tom, look at this headline. Benchmark European nat gas prices rise as much as 50%. That's intraday. That's not year-to-date, Tom. That's intraday.
It's intraday, and let's be clear here. This is into the afternoon and early evening across those time zones. And, John, I would really suggest the news flow in the coming 3-4 hours will set the tone for a second market adjustment. Maybe it's, say, 12 noon our time.
Got to set the tone for the Fed speak, too, the ECB speakers.
How do they speak today? I mean
this is the lineup.
You rip up the script, and it's not a time for a joke.
Speeches, Q&A on the fly, Lisa Bostic, Mester Daly, Waller, all lined up. through this afternoon.
How do they give guidance at a time of such incredible uncertainty? Do they talk about taking a step back, or do they say we're going to go ahead and then wait? What are they looking for to determine the economic ramifications of this, especially as we see the ongoing jobless claims fall to the lowest levels going back to 1970 in the United States?
The ECB's got to be in a tougher place here, Tom. I think this is so hard for the ECB, with energy prices doing what they're doing, growth already soft in Germany for Q4. You saw the Germans scared of what would happen in Q1. Some real weakness up front in the first month of Q1. Where does that leave the ECB?
Well, we're going to hear from Lagarde. John, to be clear, there was a correction to the headline for those like me confused.
Tomorrow.
We were looking for a headline today, but it's tomorrow, right?
Press conference, 3 p.m. Brussels time, as I understand it, after talking to the team.
I'm going to bring this up, John, without attribution. I've got to be very careful here. It's out in the Twitter sphere. But like the German team taking the Gazprom tag off the uniform, some reports of Russian troops entering the Chernobyl region. That speaks of a time long ago.
We'll stay on top of the headlines, Tom. More still to come with the Bloomberg Surveillance team, with Tom Keene, Lisa Abramowitz and Jonathan Ferro with you through the next 2 hours, with equities down off the lows, but down 1.6%. This is Bloomberg.
It is President Putin who is bringing war back to Europe.
This is a deliberate, cold-blooded and long-planned invasion.
The United States, together with our allies, will defend every inch of NATO territory.
Today,
in concert with our allies, we will agree a massive package of economic sanctions.
The Russian leadership will face unprecedented isolation.
This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide on TV and radio. This is Bloomberg Surveillance. Good morning to you. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. TK, about 30 minutes into this session, we're down 1.5%. Just words you do not want to wake up to, Tom. War in Europe.
There was a headline, Russia invades Ukraine, and it was more than an invasion. It is a multi-front invasion, and the news flow extremely supple right now. As I mentioned moments ago, John, and I know we go to Henry in Moscow, what is important to me now are the headlines that are not being written. There is a silence across much of the geography of Ukraine.
And a silence on leadership in the G7, EU members, Tom, the President of the United States, because right now they're in a meeting. We wait for their response.
We have lots of internal memos, and we had one in Washington that said to me there were two camps at the White House. There's no time for camps in any of this diplomacy and reaction, John. There needs to be singular action, and you wonder, will there be that, and will it be coordinated?
Lisa, the dark words of the Russian president earlier today, vowing to, quote, demilitarize the country and replace its leaders.
And right now we're hearing reports of heavy fighting in several different places. We're hearing of military bases being targeted in Ukraine by Russian Air Force, as well as ground troops. We're talking and hearing about people hiding out in Kiev, in the capital, as they hunker down for what feels like something that's just getting started.
And we're hearing from senators as well, Lisa. Senator Manchin, in the last hour or so, the U.S. must impose, quote, crippling sanctions on Russia. And we've all been talking about this, not for the last couple of days, for weeks, for months, for years. If this kind of thing ever happened, can you impose crippling sanctions on Russia without crippling Europe?
And right now, given the fact that you're seeing natural gas prices surge 50, 60% on an intraday basis, how much is their hand called by what the actual consumers are doing? And what you've said is absolutely right on. The ECB has a much more difficult job right now than the Federal Reserve, because that economy is a lot more vulnerable and frankly, on both fronts, because it hasn't responded and rebounded in the same way that the U.S. economy has.
Let's whip through this price action briefly.
Yeah.
About 30 minutes into this session, we are off lows. We're down by 1.9% on the S&P, still down by 1.6% on the Nasdaq. There is a bid in the bond market, but yields are off the lows too, down about 9 basis points, Tom, to 189.92. Crude, that move backs away as well, Tom. That was through 100 early this morning, 97.34. Brent crude nicely through 100 early this morning. But Tom, we just back away a little bit from the bigger moves we saw early this morning.
No question about it. Across the haven pairs that I look at, including Euro, Swissy, and gold, you're absolutely right, John. We move back a little bit, but I would suggest we move back a little bit, waiting for the immediate news, certainly the White House front and center.
Well, Tom, we have a time, 12:30 in Washington, the President of the United States to speak about Russia and Ukraine.
How do you do,
at
John?
12:30
How do you do
in
partial
DC.
sanctions today? Explain to me a tranche.
I don't think they're going to be
approach.
talking about the first tranche. Lisa, I think it's fair to say the language of the British Prime Minister Boris Johnson, tranche one, the language of the American President Joe Biden, tranche one. I don't think we're going to hear about the first tranche, a second or a third. This is it, isn't it?
They have to lay their cards on the table, which is probably why it's a complicated discussion, because they have to lay it all out there and figure out how far they're willing to go with a Vladimir Putin that perhaps they underestimated in terms of how quickly he would move into Ukraine.
Let's get to team coverage. We can start in Moscow and we can get to Bloomberg's Henry Meyer. Henry, you've seen the reports, the march towards the capital. Henry, that's a real escalation. Your read on things at the moment from your perspective, from where you're sitting.
Right. I mean, what we've seen today is a kind of campaign of shock and awe. The Russians, unleashed a barrage of missiles, air attacks, and artillery, which aimed to cripple the Ukrainian air defense installations and command and control centers. And then you saw, ground troops moving in from several different directions. And as of early afternoon, there were already attempts by the Russians to take a key airfield near the capital. So it doesn't appear likely that the Russians will actually try to move into the cities at this stage, but they may encircle them.
Henry, the idea here of Mr. Putin, and as you say, with great respect for your years in Moscow, the Russians. It's just about Mr. Putin. The Guardian a few days ago mentions his reign. Explain to our global audience in this time of crisis how small the circle is around Vladimir Putin.
Well, he has become increasingly isolated, particularly since the pandemic started 2 years ago. He was, for health reasons, was not allowing people to see him. Therefore, he has become very reliant on a small entourage of security hawks. And this was very interesting earlier this week when he held a Security Council meeting, which paved the way to his invasion. You saw that these were the people. He is relying on the heads of the intelligence agencies, the military people. That's the advice he's getting.
Henry, Angela Stent talks about the near abroad. I think we all understand that Ukraine, and certainly eastern Ukraine, out past Kyiv, is the near abroad. If Russian troops move west, somewhere in the vicinity of Poland, does Poland suddenly become the near abroad?
I think honestly that this is about Ukraine. I don't think we're going to see anything beyond that. But this has been something that for years Putin has been concerned about. This 2014 we saw those events, and I don't think anyone could have imagined it would reach the point it has today, but it has.
Henry, we're hearing a lot about people leaving Ukraine, trying to flee, and the surrounding nations preparing for refugees. In Russia, are there any people who are planning to leave ahead of some of the sanctions and the isolation of that nation?
I'm sure people are thinking about that very seriously. I mean, there's certainly a sense of panic among certain people that they're braced for what's ready to come, and frankly disbelief. I don't think people have quite come to grips with this new reality. It's like they're woken up in a different country.
At what point does that factor into Vladimir Putin's thinking? A lot of people, particularly in the West, were feeling like they're really not negotiating with a reliable actor in any way. How about the rank and file of Russians? Do they still think that this is the West, or are they looking inward and trying to figure out the leadership?
I do think that there's a very serious threat to Putin's position, especially if this operation starts to go wrong. If you have high civilian casualties, definitely Russian people consider Ukrainians as a friendly, a brotherly nation. That hasn't changed. So I do think that he's taking a huge risk.
Henry, we have to leave it there. Stay safe, sir.
Wow.
It's good to catch up with you. We appreciate it. Henry Meyer there of Bloomberg. As that headline crosses the Bloomberg, Tom, just moments ago, that President Biden will speak about Russia, Ukraine at 12:30 Eastern Time down in D.C.
And what he knows, and our authorities know, including General Austin at the Pentagon, John, is the military efforts are moving. We're very scrupulous on surveillance, and particularly with this special coverage, folks, to be very careful about the videos that we see in the modern social media and all that. John, let me editorialize. The social media out of Ukraine is grim.
Well, let's not go there, Tom. It's already dark enough, isn't it? And it's incredibly personal for the people of Ukraine. Can we change the behavior of the Russian president? You've heard the words from Ian Bremmer this morning, Tom. Unlikely.
Yeah, it's just simple. I mean, Dr. Bremmer weighs in, as do others, waiting to see the level of sanctions as well. John, why don't you bring in Anne-Marie Horton? She's had an exceptionally busy day. She's been sending me her sourcing in Washington. It's complex.
Well, AMH, let's start here. We hear from the president at 12:30. Over the last hour, he's been on the phone with allies. They've been so well scripted. Every single term, US intelligence has been on top of this. They've made everything very public. And every single turn, the Russian has basically followed up with every single step the US expected. So now walk me through what we can expect on the sanctions side of things. Are we still on the same page? And is this it? Is this the trigger for the big one from the United States, from NATO members?
So let's just be clear. We just don't know yet, right? We know potentials that can happen, but we don't know what the full-fledged package is going to be like, because the U.S. has floated a number of things and actions and penalties they can take against Russia to try to deter Putin when they were releasing all of that intelligence. Two things we should note potentially. One, the other day when they went after two Russian banks that are very close to the Kremlin and the military, they did mention that two other bigger banks could be in view. They said this is the beginning of an invasion, this is the beginning of our response. And another official said that could be Sberbank and VTB, incredibly close to the Kremlin, and they also have a little bit more of a global reach. On the very far side, potentially could be this quote-unquote what they would call the nuclear option, and that would pulling Russia out of SWIFT. It would also potentially, another option would be cutting off Russian oil and gas. But these two items would be very difficult for European leaders and the President of the United States to swallow because the blowback on their own economies would be, quite frankly, catastrophic in this environment of high inflation.
AMH.
So that is where we are right now.
I just want to bring up that Ian Bremmer tweet. The US will be rolling out maximum sanctions package against Russia today. Expect the same from the EU and the UK. His opinion over at Eurasia Group. Goes on to say it will have zero impact on Putin's behavior. Someone actually followed up to that tweet and asked him what would change his behavior, what would shape it. And I believe we catch up with Ian Bremmer a little bit later today. He said China deciding they won't tolerate his behavior. And what was fascinating about things overnight, Anne-Marie, in that Emergency Security Council meeting late Wednesday, China's ambassador to the UN, the only one who did not criticize Russia's actions. That's a secondary challenge to all of this, but Anne-Marie, it's there. I just wonder how big that effort's going to be to get the Chinese on side with what's happening at the moment.
It's not going to happen. China will not come on side. We've seen this time and time again. They are walking a very fine line. This is something that China, frankly, at some levels of the Communist Party, do not want to be dealing with. President Xi has a meeting coming up that is incredibly important, that will cement his legacy, give him an unprecedented third term, and they only do these kinds of meetings twice in a decade. This is what they want to focus on. They don't want to be dealing with what happens on these sanctions with Russia, what could potentially mean for anything and incursions we may potentially follow up with in the future. But we should note Russia and China have been growing incredibly close. This part of this is also financially. Russia's trying to do more in the yuan instead of the dollars, and this is where a lot of their energy goes as well. But they are the junior partner in this relationship. We should also make that very clear.
Anne-Marie, in a lighter time, we kid about your number of appearances in Vienna coffee houses at OPEC meetings. All the OPEC centrality is on Germany as well. And one name we have not mentioned this morning, Saudi Arabia. How will Riyadh react to this? What is the assumption of the White House?
So far, I haven't been able to get anyone in Riyadh to get on the phone with me just yet this morning, but the question is whether or not they will come to help in aid of trying to push down this oil price, because we are going to see higher oil prices and potentially even higher than we are now when we get a potentially harsher sanctions package coming out of the United States and European capitals. Listen, this has been a little bit underreported because so much focus has been on Russia, but two senior administrative officials have recently been to Saudi Arabia. A number of talks were happening. This was about Iran, this was about Yemen, but also about the stability of global oil prices. I read that as a potential ask to the kingdom to help out. But Jonathan has been bringing up a very good point as well. We're potentially close to Iranian nuclear deal. And for this administration, the timing of that with this oil market would be very useful. My question now is, does this now embolden the Iranians to make some more hardline gestures because they know the U.S. could really use their barrels in the market?
AMH. Great reporting, as always. Looking forward to hearing from the President, 12:30 Eastern Time down in Washington. Brent backing away from session highs. The state of the market looks like this. Equities off session lows. We're negative 1.4 on the S&P. On the Nasdaq, we're negative about 1%. Just getting away from those session lows just a little bit more. Lisa's been running you through the Fed speak that you can expect today. Bostic, Mester, Daly, Waller. We heard from Barkin. Now, if you're wondering how the Fed speak will navigate some of this, keep it vague. Lisa, here's the headline. The time will tell if the Ukraine situation changes the Fed outlook. Time will tell.
Yeah, basically, we're not going to give you anything because we don't know yet. They've always been saying uncertainty, uncertainty, uncertainty before it was shifted to inflation. Are they going to back away, though, from that and saying that perhaps the balance of risks is weighted more evenly between a number of different things, but you're not going to get guidance there. And frankly, not a lot of guidance as to what's going to happen over with Ukraine and Russia right now.
We're looking for some guidance now. Peter Oppenheimer of Goldman, first on equities, and then we'll catch up with Christian Malik of JP Morgan on crude. I want to get to you first, Peter, and thanks for being with us. Just a simple one. I've asked so many people. You've done the research. You've got an outlook. All your suggestions. What changed this morning? What did you have to rip up after what we've seen play out across Ukraine?
Hi, John. Yeah, look, I think that the markets respond in real time, and the most obvious impact of what we've seen in this escalation is just a rise in uncertainty, and that means a rise in risk premia. We estimate that each 20 basis point rise in risk premia knocks around 5% off the equity market, and we've seen something about twice that, which is quite large relative to historically what we've seen with political events. And it should be said that generally speaking, political events, as long as they don't have big macro spillovers, tend to fade and you tend to get some kind of rally. Now, obviously, this is a very uncertain situation, and there are some major political and economic implications, not least of which, of course, is via energy prices. We were already seeing a fairly decent correction in most equity markets because of the fears of higher inflation and interest rates. Those that were more defensive and perhaps more value-orientated, particularly those in Europe, are now firmly in correction territory as well. But I would say that if we look at our tactical indicators, our risk appetite indicator, for example, the markets are now really pricing quite a big slowdown, and positioning has become quite negative, and typically from these sorts of levels in that indicator, we do get a rally.
So just a couple of days ago, I was speaking with a portfolio manager who represented a sea change, basically saying go toward Europe, go toward European equities and away from the U.S. because of the hiking cycle. Has that narrative completely got shifted, though, on its head, even with the valuation story, just simply because the risk is that much higher in that region?
Well, certainly Europe is much more exposed, both economically and, of course, in terms of proximity. But I don't think it really changes the fundamental underlying issues. First of all, the European economy is actually pretty robust at the moment, much different to the situation, say, after the financial crisis. To your point, the policy cycle is less aggressive in Europe. In fact, fiscal policy is still easing. Interest rates are likely, at least in the Eurozone, to be rising at a much slower pace. And we've got strong private sector balance sheets in Europe. We have more exposure to value, to energy stocks, and to other areas of the market that investors have been tilting towards. And we should also recognize that valuations are reasonably good. I mean, if you take the Stock 600, for example, it's trading on a P of about 14 times now, having peaked at around 18. Much cheaper than the US and pretty much in line with its long-run average. So in the short term, of course, uncertainty is going to be a big drag to this market, but fundamentally, it looks reasonably sound, and we do remain actually overweight on a one-year view.
Peter, in your geography at the London School of Economics, which, folks, is world-class, even long ago and far away when Mr. Oppenheimer darkened the door, there's an idea of the European experiment. It is under threat today, Peter, as you and I have never seen, even with the collapse in '91. Frame for us this moment and how Europe must adapt. Which institution do you look for, or does Goldman Sachs look for, to provide a new stability for Europe?
Well, it's a great question, but we should emphasize that the institutional framework across Europe has strengthened dramatically since the days of the financial crisis and the sovereign debt crisis. Obviously, we've had a ramp up in the available instruments that can be used on a Europe-wide basis to deal with any systemic shocks, and that's a significant positive. And we should note that, for example, while sovereign spreads have widened a little bit in places like Italy, it's been very modest relative to what we've seen in previous periods where there've been heightened uncertainty. And I would say that from that perspective, things are looking a lot more robust. That being said, one of the critical issues for Europe, of course, is energy security. Europe has been ahead globally in terms of its focus on decarbonisation and ramping up investment in things like renewables. And I think this adds a new degree of urgency to that programme because that's what Europe is going to have to really agree on in order to become more independent in terms of its sources of energy.
And Peter, great to catch up with you, sir. As always, a difficult moment for the continent and for the people of Ukraine. Thank you. Peter Oppenheimer at Goldman. Story in the equity market is we're off the lows. We're off the lows at the moment. On the S&P, we're down by a little more than 1%. On the Nasdaq, we're only down 0.5%. Still a lot of pain in Europe. The DAX is down by 3 or 4 percentage points. But we're getting some ECB speak as well. And it's not just the line, Lisa. It's the individual with the line. Yes. It's Governor Holzman who says the Ukraine conflict may delay the stimulus exit, and that is one of the most hawkish members of the Governing Council, suggesting that is an important headline from this ECB.
Earlier this week, he was out with some pretty hawkish proclamations about exiting more quickly. What he said more specific in an interview with Bloomberg News is it's clear that we're moving toward normalizing monetary policy. It's possible, however, that the speed may now be somewhat delayed. How much do we get this reiterated by others? But yes, he is one of the most hawkish members. The fact that he is coming out with this is really quite notable in terms of a sentiment shift.
And if you just quickly pull up a chart, Tom, of the Italian 10-year off the back of that headline, that yield just shot lower. The Italian 10-year yield now down by 12 basis points on the day, down 12 basis points. A lot of that, Tom, coming after that headline from an ECB Governing Council member.
Well, you see the market react, folks. We see that across what's called Bloomberg Launchpad, and it's a red and green maze of data. Lisa's is different from John's, is different from mine, but everything just fired right up. My benchmark measurement of this, folks, is the Standard & Poor's volatility. The VIX 37-ish, and through the morning, we're now down to 34.29. What we're trying to do here, and we welcome all of you on radio and television to Bloomberg Surveillance on this historic day. We will be with you to 12 noon. David Weston scheduled to bring you the President of the United States in the 12 o'clock hour. And on radio and television, what I would suggest is we have a team behind us this morning killing themselves in London and New York to bring you the best voices. We welcome Christian Malik, head of EMA Energy Equity Research at JP Morgan and an exceptional student of the European continent and hydrocarbons. Christian, let me open with an inflammatory statement for you to react to. Can this be Riyadh to the rescue? Is this a moment where Riyadh can adjust hydrocarbon fears?
Well, when you think about, hey Tom, and thank you for the kind comments. I think when we think about OPEC's reaction function, we've got to think about what are they there for? They're there to step in if we see physical oil outages. In this context, we haven't seen oil outages, and therefore what we'd see them do effectively is manage a risk premium. But I'd remind you that when we saw this risk discount, I remember we had that first conversation back in November as oil prices were collapsing, OPEC didn't step in, Saudi didn't step in order to mute that decline because it was ultimately not linked to fundamental shifts in demand and or supply. Equally, while it's still early, we haven't seen any fundamental shift in supply, and therefore it's unlikely that we see OPEC respond, albeit that they will be looking very carefully at physical changes in supply and then responding, I think, as a result of that.
Christian, could we just get a gut check from you of how much your expectation for oil prices this year has changed as a result of this invasion of Ukraine?
I think when we highlighted the risk premium analysis back in November of oil prices potentially shooting to $125 this year and $150 next year, it was firmly on lack of spare capacity. And when I sort of link that to today and the last few weeks of events, when I think about the impact to that risk premium, I start with what has changed in terms of total spare capacity. You know, we have a very low number in our expectation, around 2.8 million. It's the lowest on the street. And when I think about the impact to that spare capacity, the question I'm asking is, well, will Russia's spare capacity be impacted? Now, potentially through financing and underwriting that spare capacity, we had Russia in the medium risk camp in terms of its ability to deliver production. Does it ever effectively move now into the high risk camp of delivering along the lines of Angola, Nigeria and others? In which case, if it were to do that, that $30 risk premium is here to stay. It's not reversible. And that's regardless, Lisa, of whether we see a change in production from Russia. It's just they won't be able to deliver that spare capacity. They won't be able to live up to their quotas by virtue of not having the funding and the wells. In that context, we could see oil prices moving closer to $120 to $125 and stay there.
And stay there. How much does the Iranian deal potentially shift this equation back down to something that would be more comfortable, certainly for the United States and Europe?
Well, Iran would ultimately offer a relief valve in the context of being able to add additional barrels, but we are quite skeptical as to what Iran can offer at the moment, even if sanctions are removed. We wrote about this again in November, that they could only potentially deliver over and above 500,000 barrels because of the lack of investment. If Nigeria is having problems and Kuwait's having problems, how is Iran able to deliver the spare capacity in that context? And therefore, we'd expect Iran to have a sort of muted impact in the context of limited spare capacity. It would offer relief, but it wouldn't fundamentally change the risk reward in oil at this point.
Christian, let's extend this conversation if you can. I'd love to catch up a little bit more and talk about the commodity and then talk about the companies that are pulling this stuff out of the ground as well. Equities are off the lows. On the Nasdaq, we're down just 6 or 0.7%. Brutal start to the year, though, as you all know. On the S&P, we're down by 1.3%. We're down about 53 points on the S&P. A turnaround in the Italian bond market as well, Lisa. This is a notable headline from a known hawk at the ECB, that the Ukraine conflict may delay the stimulus exit. People might say that's obvious, but Lisa, we were trying to work out, because some people said it would make them go quicker, make them go slower for the Federal Reserve. It's still up in the air.
Well, people were saying that even Robert Holtzman himself was actually coming out and saying that perhaps the ECB should move faster. And that was earlier this week. So the pivot for him to come out and talk about a possible delay really underscores not only how quickly things are moving, but how much of a sea change this could potentially prompt amid some of the biggest central banks.
You're getting an important line as well from a US official, Tom, a defense official, expecting multiple phases of the Russian attacks. Have not seen Russian movements into western Ukraine. Just goes on to say Russia used 75 fixed-wing heavy and medium-size bombers, Tom. Just a bit of detail right now.
And Chernobyl under attack. This is 60 miles north of Kiev, and there's just no question about it. Just below the Belarus border, there's heavy fighting near the former nuclear disaster.
From New York City this morning, good morning to you all. The coverage continues on TV, on radio for our audience worldwide. This is Bloomberg.
About that all day yesterday.
This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equities look like this about an hour into the session. We back off away from session lows, still down 1% on the Nasdaq. The S&P down by 1.5. A turnaround of the European bond market. Italian 10-year yields lower, much lower, as a known hawk on the governing council backs away from the idea of tightening anytime soon. Euro dollar breaks down as well. The dollar index is stronger, up by 1.4%. The dollar index 97.51. President Zelensky on Twitter, Tom, of Ukraine. I'll read it out verbatim. Russian occupation forces are trying to seize Chernobyl. Our defenders are giving their lives so that the tragedy of 1986 will not be repeated. We've reported this to the Swedish leader. This is a declaration of war, Tom, against the whole of Europe. That language, let's be very careful with that last line, Tom. That language from the Ukrainian president just moments ago.
And this is a story in motion here as we go to the president now. In 2 hours, President Biden will be speaking. And again, we are getting perspective, as from Christian Malik on oil moments ago. We are thrilled to bring you now the perspective of someone out of Florida and West Point who has a commanding understanding of Europe, working with Admiral Stavridis at NATO, and of course his leadership as former U.S. commanding general in Europe for American troops. Ben Hodges joins us today. General, thank you so much for joining us. I want you to convey to our listeners and viewers across this nation right now what is the number one thing our military can do to assist NATO and to assist Ukraine.
Well, the presence, Tom, of American soldiers is always such a powerful message of assurance to allies and also of warning to the Kremlin. The Kremlin does not want to take on the U.S. Army or Air Force or Navy, especially either alone or as part of NATO. So the deployment of American troops to the eastern flank of NATO, I think, was a good move and a strong signal.
If we further deploy Army to Lithuania, which you know encyclopedic, or we deploy Navy through the Bosphorus into the Black Sea as Ukraine begs Turkey to shut down the Bosphorus to Russian military ships, if we do that, how will that change it for Ukraine? What does it signal now for Ukraine?
Well, of course, Ukraine is not an island. It's strategically important for all of us, including Russia, because of where it sits on the Black Sea. It's why Catherine the Great stole Crimea back at the end of the 18th century. So Turkey, our ally, could really change the calculus for the Kremlin if Turkey were to close the straits, which it's entitled to do because of its sovereignty, to Russian Navy. That would make a significant impact on Russian thinking. What the United States and our allies are doing, reinforcing NATO's eastern flank, of course, tells the Russians, do not let this get out of control. Do not let it spill over into a NATO country, because then that will also completely change the situation.
What will you listen for from General Austin, now holding court as Secretary of Defense at the Pentagon?
I would like to hear him say that we are accelerating the delivery of weapon systems that Ukraine needs. I mean, we need something like a Berlin airlift in terms of quantity and speed to get more air defense systems, specifically.
Well, General, this is critical. Do we need to put U.S. troops into Lviv right now to go across from Poland, a NATO country, X number of miles into Lviv, and set up camp in western Ukraine to say enough?
No, I agree with the president here that that we don't need to have NATO soldiers, American soldiers, inside Ukraine. What we can do is, working with our Polish allies, establish a line of communication that can send what we call white convoys, non-military convoys, carrying all the stuff that Ukraine needs towards Lviv, and then the Ukrainians would distribute it onward. I think we don't want to get to a situation where by our actions we end up with Russians and Americans fighting each other.
Ben, just to give you a sense, the U.S. actually just put out this headline coming across: no new troop deployments currently planned, but possible. Why is it so important to not have troops necessarily in Ukraine from the United States? Why do you think that that is a tactical misstep?
So, or let me caveat that. I was disappointed when the 150 National Guardsmen from Florida actually were pulled out of their training mission that has been going on for 6 years there in Yavoriv. I wish that they were all still there. But when you bring in additional troops, this then looks like escalation, and keeping all of our allies together is an essential part of our resistance. And so I think that in this case, we want to avoid a situation that ends up with NATO forces going against Russian forces when it's not in a situation of Article 5.
Ben, there has been discussion from European nations about contributing more troops to NATO in the surrounding nations, not necessarily directly coming into conflict with Russia. What's your view on their capacity to increase troops, especially given the non-military action that you've seen from the likes of Germany post-World War II?
Well, it's a fair point. I think what we're going to see is NATO reconsider our compliance with the so-called NATO-Russia Founding Act, and that we will go to permanent basing in Estonia, Latvia, Lithuania, Poland, and Romania of U.S. and or other NATO troops. We have not done this in a good faith effort that even though Russia had abrogated the NATO-Russia Founding Act, we were complying with the provisions that say no permanent basing. I think this is going to change, and I think we will see more NATO troops, particularly in the Baltic region. We really need to improve our air and missile defense in that region, and Germany and the Netherlands have a lot of capability where they could help here.
General, can I work through that line from the Ukrainian leader with you in real time? When you hear a line like this, Russian occupation forces are trying to seize the Chernobyl power plant. Our defenders are giving their lives so that the tragedy of 1986 will not be repeated. We've reported this to the Swedish leader. This is a declaration of war against the whole of Europe. Can you help me interpret that, General? What does that mean, that last line, when they go to somewhere like Chernobyl, and you know the history there? What does that mean?
So two or three aspects to this. First of all, Ukrainian forces are achieving a lot of tactical successes against Russian forces. You won't get much coverage on this from Moscow, but for sure, lots of Russian aircraft, helicopters are being shot down, tanks are being destroyed. We're going to start seeing more and more video and reports of Russian losses, I think, as the situation becomes more clear. So that's important. And when President Zelensky, who I met 3 weeks ago in Kyiv, a tenacious guy, when he talks about declaration of war, of course, I don't take it in the means of a U.S. legal definition of declaration of war, but without a doubt, it is time for European leaders to be open-eyed and talk clearly about who we're dealing with. For sure, the Kremlin sees this as war, whether it's with ships, tanks, nuclear weapons, disinformation, cyber. Right. Russia is always in a war state of mind. It may not always involve weapons. In this case, I think President Zelensky is exactly right.
General Hodges, I want you to speak to the American people right now. And this is so urgent out of Vietnam, of the certitude of technology in military. And General Powell, of course, was steeped in that it didn't work, and that military was a tough thing with maximum force applied when needed. You're an infantry guy. When there's a silly phrase, boots on the ground, you lived it. Tell me, as an infantry guy, how we apply a Powell-like force against Mr. Putin.
Thank you, Tom. Well, of course, future war, which we're in already, will involve everything from drones, artificial intelligence, the advantages of quantum computing, but the disadvantages if our adversaries are using that, because that will break down the security of all of our IT systems, our communications networks. This is going to change things. And of course, their ability to disrupt our GPS targeting and navigating systems. So that's there. But what did we watch for the last 3 months? Endless video of rail cars carrying tanks and artillery and armored fighting vehicles, big steel Russian ships, submarines. So you get more new technology, but you still are going to have people in trenches, people still fighting with rockets and artillery. That's part of it. And Russia clearly intends to use blunt force. They're already employing this. But with more electronic warfare, they really have capability to jam that we have fallen behind.
General Hodges, we appreciate your time, sir, and thank you for being with us. Ben Hodges there, the former US commanding general in Europe. What we've learned in the last 30 minutes or so is that we will hear from the President of the United States, President Biden, to speak about Russia and Ukraine at 12:30 Eastern Time in D.C. So, Tom, just a little less than 2 hours from now. Also heard from a defense official the following. Just a bit of color on what's happening on the ground, Tom. Important details. The Russian ground incursions began into Ukraine at around 5 a.m. Eastern Time, and US officials estimate Russians have used 75 fixed-wing bombers and more than 100 missiles to attack. Just a bit of color, some detail there, Tom, on what's been happening on the ground.
Some of that is out on Twitter and, of course, unattributed, and we got to be very careful with it, John. But to get those numbers is really sobering because social media stuff is happenstance, and it's one here, one there, 5 planes, 5 jets, 4 missiles. This isn't. This is a summation with some real authority.
Big headline from the Prime Minister, Tom. The Financial Times reporting this, that the Prime Minister, Elisa, is pushing for Russia to be ejected from the SWIFT system. So let's just pause for a little bit, run through that, Lisa, the importance of that, the British Prime Minister pushing for it according to the FT.
Well, it would take time, but as Anne-Marie was saying, it's the Gmail, essentially, of the banking system. It is all of the nuts and bolts of how they connect all of the international banks. Kicking Russia out would effectively isolate that nation financially. And what Russia has said is that they would then cut off some of the gas and oil supplies in response. This would be the nuclear option. The fact that the United Kingdom is coming out for this is a massive step.
I want to be very clear, Tom, this is a report from the Financial Times on the British Prime Minister Boris Johnson pushing for Russia to be ejected from the SWIFT system. That's where we are now.
Yeah,
Russia's invaded Ukraine. Now we're thinking about the response. We're going to hear from the President at 12:30, Tom, in a couple of hours from now. And we need to see if they're all on the same page on the big sanctions we expected after a major move from the Russian president.
And with the presentation of U.S. intelligence over the last number of days, John, I wonder if we'll see a whole nother bout of intelligence. I would say just all the different reports here, the first order condition for Russia, not away from the Black Sea, is to take the airports. That seems to be the real thrust. I'll get it out. Thrust this morning.
Well, it's been a long morning, Tom. Let's go through the quote in that FT piece. The team putting this one together. It's according to one British official referring to his efforts to eject Russia from SWIFT. Johnson apparently also raised the idea at a meeting with the City of London executives yesterday. The quote, Tom, the Prime Minister is very keen on this. He's pushing it very hard. Let's see if he was successful on that call that took place, Tom, about an hour or so ago.
Working with us, of course, through the morning has been Michael McKee. He's Bloomberg Economics and Policy Correspondent and can be a discussion of the Fed. But, Mike, I want you to take all of your political economic skills of decades with Bloomberg and sum them up into what you've learned in the last hour.
We don't know anything. That basically is what it comes down to. We're still in the fog of war. We don't know how long this is going to last. We don't know what sanctions are going to be imposed. We don't know what the Russian reaction to that is going to be. So right now, the price of war, you'd call it, are guesstimates only.
Are you surprised that Fed officials have not canceled speeches today?
No, the impact on the United States will be indirect, and the impact on the people across America will be indirect, most likely through inflation. So they do have the message to give that they will be on guard for that. So far, the only 2 Fed officials who have gotten out and spoken are Tom Barkin of Richmond, who says it's too soon to tell what's going on, and Pat Harker of Philadelphia, who is a substitute voter, will be until July when the Boston Fed takes over again. But he said we should only do 25 in March because the uncertainty of this. Then you have over in Europe, the ECB, Robert Holtzmann, the Austrian, who has been among the most hawkish members of the Governing Council, saying they should pull back. Maybe this is going to delay rate moves from the ECB.
Right.
So basically, everybody wants clarity before they say anything.
And just to give a sense of how big of a pivot this is, Robert Holtzman was the one yesterday of the ECB who came out and said that perhaps the ECB ought to hike twice in 2022. Very much a hawkish statement. There is an issue, and we were speaking about this with Michael Darda of MKM Partners earlier this morning, Mike, this idea of a Fed mistake, a policy error being to actually take some key off from what we're seeing over with Russia and Ukraine and not hiking rates as much as people were expecting, that would be the policy error at a time when oil prices are only exacerbating the inflationary pressures. How many economists who you speak to are kind of emulating that kind of argument and saying, if anything, this should push the Fed harder?
Nobody's really saying it should push the Fed harder at this point because we've still got 3 weeks until the next Fed meeting, and they've got time to see what happens with the overall economy, and they were probably only going to do 25 in the first place. So if they did 25 in March, it doesn't leave them any worse off. The idea is inflation going to be even higher for significantly longer? Does it feed the energy inflation that we're going to get? Does that feed into the core? Fed isn't going to know that for some time yet, and that's the only thing that they're going to be concerned about at this point, unless we see the U.S. economy start to slow.
Mike, a lot of people were worried that perhaps the Fed was out of ammunition to deal with the next downturn, perhaps the ECB even more so. How much are people talking about that this morning at a time when if the Fed holds off on rate hikes, they might miss the boat if some of the worst case scenarios come to fruition?
Well, it's not so much about being out of ammunition. It's about not having the right tools. The Fed basically has two. They can use quantitative easing, which only inflates markets and leads to more inflation at this point, or they can raise interest rates or lower interest rates, and neither one of those is going to affect Vladimir Putin. So until they have a better idea of what's going on, sidelined is probably better, and it isn't going to be the central banks who can make a big difference. Now, we know that the president of the European Central Bank, Christine Lagarde, is coming out tomorrow. She's already scheduled a news conference, and I think what that may tell us is that there will be a banking aspect to this, and that's where the central banks come in, because they'll have to enforce some of this. And also, if there is a problem with the system, they will announce that they're providing enough liquidity to keep everything going. Beyond that, it's up to the politicians and the generals at this point.
Mike McKee, thank you, sir. Thank you very much. Equities down 0.7 on the Nasdaq, dancing around that level for the last hour. On the S&P, we're down by 1.26%. I'd like to, if we can, Tom, just work through this Financial Times story, because some tremendous reporting coming together on the Prime Minister, Boris Johnson. He's very keen on this. He's pushing it very hard. This being to get Russia ejected from the SWIFT payment system. But it's the second paragraph that stands out here, Tom. Let me read it for you. This is the difficulty of the moment now. Quote, however, Olaf Scholz, the German Chancellor, warned Johnson on Thursday that his country would not support such a dramatic move, and neither would the EU, according to officials close to sanctions negotiations. Tom, that's the difficulty of this moment, for these leaders to get on the same page on how to respond to what's happened in Ukraine.
My understanding of this is the United Kingdom is removed from the hydrocarbon pressures of continental Europe. But John, I'm going to be blunt. The dialogue has changed for everybody, including Team Surveillance here, in 24 hours. What was said on Thursday, Wednesday last, Monday last, it doesn't matter anymore. The reported news flow militarily and anecdotally, and I thought General Hodges was just brilliant. It's just simple, John. I would suggest the news flow coming to these politicians will stun them in the next 6 to 12 hours.
Elisa, what the Prime Minister of the UK wants is a very different story to what apparently, reportedly, Chancellor Scholz would like to see today.
And it really highlights also some of the divisions. I mean, people have accused him of having peace shooter sanctions in response to Russia's invading of Ukraine. How much dissonance is there? Are we going to start to see some of those fissures in more cold relief at this point? Don't they actually have to do something?
I want to get to Will Kennedy over in London just to build this story out a little bit more. Will, to talk about the commodity market and to work out what some of these sanctions might mean for your world as well. We've backed away from that 100 level on WTI at 97.62. On Brent, we're still in the 100s. Will, if I can come to you now, what are you expecting from EU leaders from the President of the United States, the kind of sanctions we can expect that are announced today?
Well, I think that what's happened so far in the oil market, apart from the huge run-up we've seen in prices, John, is that traders are very reluctant to deal in Russian crude because they don't know what the sanctions are going to be. We've seen the trading of physical Russian crude sort of grind to a halt because there are a lot of refiners that don't want to touch it, and they're worried that sanctions either directly on Russian energy or on the financial system are going to make it very, very, very hard to deal in Russian commodities, and that's one of the reasons that we've seen prices jump this morning. So they'll be carefully passing whatever's announced with politicians, not just for direct mention of oil and hydrocarbons, but financial sanctions that make it hard to finance, buy, trade Russian commodities.
Well, Europe's in for a difficult time. And we know the President of the United States has tried very hard to keep the Europeans on side as they go forward with this effort to respond to Russia. There are a couple of options on the table. In fact, I can think of three. There is a gas tax holiday, another oil reserve release, which didn't have much of an effect and impact on this crude market a couple of months ago, and an Iranian deal. Of those three things right now, Will, what's the most possible from what you look at?
Well, I think all of that's on the table because they'll be desperate to temper the impact of this increase. But I think there are other things that we need to think about as well. What we didn't get in November, because there wasn't a reason for it, was a coordinated IEA release. And that's on the table now. We've got a major geopolitical event. The IEA may coordinate a stockpile release across all the industrial countries. That's something we should be watching for over the coming days, I believe. And then, of course, with OPEC, I think that Saudi Arabia and Abu Dhabi are going to come under huge pressure from Washington, but not just Washington, from Tokyo, from Seoul, from New Delhi, to say, as Tom said, everything we knew yesterday, forget it. We're in a whole new world and we need action. And I think for the Saudis and the Emiratis, they're going to come under a huge amount of pressure to add oil to the market.
Well, the Saudi and the Abu Dhabi leadership and the pressures they will face, what is the power of, say, America to apply pressure on them? Or is it a more domestic and internal pressure of their royal families that, hey, we're part of this, we've got to help solve it? Which is it?
I mean, I think they're in a very difficult position because clearly they're allies with Moscow and the OPEC Plus alliance, and they would rather not get involved. But I think Washington is going to be very intense and say, you know, we have a long-standing alliance. We are help guarantee your security. Now's the time to help us out at this moment of huge international crisis. I think that Washington will be putting a huge amount of pressure. But I wouldn't discount the pressure that's coming from their big Asian customers as well. They're going to get it from both sides, Tom.
The policy's coming together now in real time. We have the reports and we're hearing from the leadership themselves. This was the report from the Financial Times that the Prime Minister of the UK, Boris Johnson, is very keen on pushing Russia, ejecting them from the SWIFT payment system. We know, according to FT reporting, that Chancellor Scholz is less keen on that. Lisa, moments ago, you caught this one. The Ukrainian Foreign Minister had this to say: "I will not be diplomatic on this. Everyone who now doubts whether Russia should be banned from SWIFT has to understand that the blood of innocent Ukrainian men, women and children will be on their hands too." Capitalized, Lisa. Ban Russia from SWIFT.
I think the most telling aspect is Olaf Scholz saying that he cannot get behind this right now, at least according to the Financial Times reporting. To give some perspective on this, Russia has said that this is the nuclear option and that they would respond by cutting off oil and gas supplies at a time when gas prices, natural gas prices in the European Union right now have been surging intraday more than 50%. How do they justify bearing the cost in the population at a time when they don't have that many replacements and we're not hearing about a sustainable system to supply them with gas and oil?
Tom, that's the issue, isn't it? We're doing this in real time.
Well, we're doing it in real time, and I'm going to be honest and direct in that we're starting to get images. They're rare images, but they're out on social, John, that really begin to show the bloodshed that the foreign minister was just speaking about. You wonder about the future of the leaders as Kiev is under attack from Belarus to the north. Russia's taken out the airports by all reports, John, and you just wonder the distance from those airports to central Kiev, the distance. The New York Times with the map showing 3 separate far western Ukrainian incursions where there's been events with the Russians. It is exceptionally fluid here to what, John, 90 minutes to the president's comments.
12:30 Eastern time, a dark day for that country. These are the moves that we're seeing in commodities. Natural gas, where are we now?
Up 60%, 59.6%, just to give some sense. And it's good that Tom was mentioning the bloodshed. It is bizarre sometimes to talk about markets at a time of serious individual distress and families fleeing nations. This is what people are trying to game out in terms of the longer term ramifications, and natural gas front and center, particularly for Germany, for France, for a lot of the continental European nations.
Is Will still there? Will, I'd love for you to have a final word just on natural gas. The dynamic we've seen, not just over the last few weeks, but over the last 12 months, Will. We've already had an energy shock, and we handled 2.
Yeah, I mean, it's an enormous move. I think my final thought would be this is across all commodities. Oil we've discussed, natural gas, huge moves. Don't forget about food. At the moment, we can't export. Exports of wheat from the Ukraine have stopped, ground to a halt. Wheat prices are up to a 9-year high. They rose 15% in Paris this morning. This is going to be an inflationary shock from lots of different directions, energy, but also food. And I think we're only just beginning to process how big the impact can be.
Will Kennedy, thank you, sir. Just to go over some of this again, just the latest as the response comes together from the Europeans, from the UK, from the US. We're going to hear from the president at about 12:30 Eastern time. Sometimes that's late, Tom. Given the moment, It might be late again, but that's the marker, the one to watch. It's in the diary. The FT reporting that the British Prime Minister is pushing to eject Russia from the SWIFT payment system. They're also reporting that Chancellor Scholz is reluctant to do so. The Ukrainian Foreign Minister, very public, straight out there on Twitter, Tom, saying, get it done.
We've got a team in London and New York working on this morning, folks. And John, I am thrilled to tell you that Angela Stent will join us here. Her book, Putin's World, is definitive. She's with Brookings. She will join us before the president speaks.
We'll run you through the price action ahead of that too. We're down 1% on the S&P. Where are we now? About 90 minutes into the session, down 1%. In the NASDAQ, on the NASDAQ 100, we're only down 1/3 of 1%. Call it a quarter now. So this pain was global for the equity market. It's starting to become just a little bit more regional as we back away from the lows on the NASDAQ.
Yes.
And we're down about 4% on the equity benchmark in Frankfurt, Germany. Another row with Tom Keene, Lisa Abramowitz and Jonathan Ferro on radio, on TV, for our audience worldwide. This is Bloomberg.